China's UBS SDIC silver fund down 40% from peak, yet still at till the 29% premium to NAV after halts. Persistent Shanghai premiums signaling physical tightness, export licensing tightening global flow, industrial demand clashing with speculative unwinds. Hey everyone, if you're sitting on a 401k, some cash savings, bond funds, broad market ETFs, tech-heavy positions, maybe a little gold exposure or even silver ETFs, listen up. Right now, your purchasing power could either stay protected or slowly erode depending on how this plays out. Just in the last few days, China's only pure-play silver fund, the UBS SDIC one, slumped again, hitting its 10% daily limit multiple times, down over 40% from its late January peak, yet it's still trading at a 29% premium to its actual value after trading halts to protect investors. What most people missed is the real strategic reason behind China's moves with silver and why it's not just random hoarding, but something much more deliberate. By the end of this video, you'll understand exactly what's driving China's silver actions and how to think about it for your own setup. Here's the simple roadmap. First, the problem, why silver's suddenly so volatile and why China's role matters so much. Second, the mechanism, layer by layer, what they're actually doing and why. Third, your action plan, a calm way to watch this without getting caught up in the noise. Let's dive in. Silver isn't just shiny jewelry or coins, it's an industrial metal first. More than half of all demand comes from solar panels, electric vehicles, electronics, AI data centers, all the stuff that's growing fast right now. China's the biggest player here. They refine a massive chunk of the world's silver, they use huge amounts domestically for their tech push, and starting January 1st, 2026, they put export licensing in place. It's not a total ban, but it's controlled, only certain firms can ship it out. Think of silver like oil back in the 1970s. If one of the biggest producers starts keeping more for themselves, the whole global price feels the squeeze pretty quickly. Quick question. If silver's so industrial, why does it feel like it's trading like a meme coin lately? Because when humans mix with big volatility, things get interesting fast. A lot of people think China is hoarding all the silver just to mess with the West. Reality check, they're securing supply for their own massive build-out in solar, EVs, and chips. The export controls are similar to what they did with rare earths years ago, strategic, not some kind of attack. Possible outcome, tighter global supply, higher physical prices in places where it's really needed. Pros don't just stare at the spot price. They watch the Shanghai versus COMEX spread. Right now, that premium in China is screaming physical tightness. They track warehouse stocks, COMEX is low, while Shanghai dynamics are shifting. They look at industrial demand forecasts. Solar alone could pull in hundreds of millions of ounces a year soon. And they monitor those export license approvals. Since January, flows are restricted, maybe by tens of millions of ounces. The numbers tell the story. Global silver has been in deficit for years, demand outrunning supply by 200 to 300 million ounces annually. China's tighter controls just pour fuel on that fire. It's like a crowded restaurant. If the biggest table suddenly starts ordering most of the menu for themselves, everyone else's wait time jumps. Think back to rare earths around 2010 to 2011. China restricted exports for strategic reasons. Prices spiked hard, then eventually stabilized as other sources came online. Not saying it'll play out exactly the same, but it's a solid analogy for how silver could see sharp moves before finding a new balance. So far, China tightening exports, industrial demand booming, physical premiums staying elevated. Makes sense, right? If you hold tech ETFs, that's actually a plus. Those companies benefit from the same trends pushing silver demand higher, like solar and EVs, cash or bonds. This adds an inflation hedge angle. Silver has historically held value when uncertainty rises, gold or silver ETFs, or physical. This volatility shows why spreading things out matters. Silver swings harder because of its industrial side. Possible scenario, prices push higher if those deficits keep growing. Another scenario, a cool down if the speculation unwinds more. Another myth floating around, this is some secret plan to back a new currency or crash markets. Reality, it's way more likely about building strategic reserves for tech leadership. We'll keep an eye on PBOC moves and real demand numbers. Back in 2008 to 2011, silver had a big run when industrial demand and safe haven buying collided. It spiked to $50, pulled back hard, then consolidated. Similar ingredients now? Possible, but nothing's guaranteed. Silver's like that friend who stays calm for ages, then suddenly spikes 60% in a month. Classic overachiever. Another myth, after these big drops, silver's going to zero. Reality, fundamentals are still strong, ongoing deficits, green energy push, recent plunges of 10 to 17% are just normal volatility after massive runs. This isn't financial advice, just a clear framework to help you think it through. For portfolio decisions, if your goal is long-term growth, say 10 plus years out, and you already have tech exposure, a small allocation to silver, maybe physical or an ETF, could make sense for diversification. Think 5 to 10% max in precious metals overall. If your horizon is shorter or you're more risk-averse, stick with broad ETFs and just monitor inflation signals. Your watch list, keep an eye on the Shanghai COMEX premium widening means physical is tight. Track silver ETF flows and those fund NAV premiums in China. Watch industrial reports, solar installs, EV sales numbers. Stay on top of China export data and any PBOC reserve hints. Key price levels, $80 as potential support, $100 plus as resistance if momentum returns. Risk management checklist, keep position sizes small, 1 to 5% of your portfolio. Diversify, don't load up on just commodities, avoid leverage or margin, volatility can wipe you out fast. Have an exit plan, maybe rebalance if silver doubles or hits a certain target. Let's wrap this up quick. China's export controls and apparent stockpiling are strategic moves to support their tech and energy dominance, amplifying silver's built-in supply deficits. Volatility has been extreme, those recent sell-offs prove it, but the underlying drivers haven't vanished. Here's the reframe. This isn't simply hoarding, it's China betting big on the metals that power tomorrow's world, and silver sits right in the center. If this helped you see the bigger picture, drop a like, subscribe for more macro breakdowns, and hit the bell. We'll keep watching these metrics together in the coming weeks. No crystal ball here, just probabilities and scenarios. We'll see how it unfolds. Thanks for watching, talk soon.